Hi all, my name is Jan Nieuwenhuis. I'm going to talk about the Chinese gold market, Chinese gold demand. I started researching the Chinese gold market in 2013. At the time I launched a blog under the name Koos Jansen, which is a name that most people think is my real name, but it's not. In 2014 I came working for a Billion Star, which is a precious metals dealer in Singapore, and this is the company I'm still working for, by the way. So I have been studying the Chinese gold market for over 2 years now. It has been kind of a difficult process because the Chinese are very secretive about their gold strategy. For example, they do not disclose gold import data in their regular customs reports. The People's Bank of China is not really honest about their true gold reserves, and a lot of what is being written in China about their gold market is only published in Chinese. So it has been kind of difficult to translate all those reports and laws to figure out what the structure is of the Chinese gold market. But it has been very worthwhile. Okay, let's get started. We're going to talk about the Chinese domestic gold market. I say domestic because there are also free trade zones in China. For example, there's one in Shenzhen and one in Shanghai. Gold can be imported and exported from these free trade zones, but that is all separated from the Chinese domestic market. And the domestic market is a closed system, so everything that is imported into the domestic market is not allowed to be exported again. Now, the most important thing about the Chinese gold market is that Chinese gold demand is at least twice as much as what is reported by the World Gold Council and thought by most investors around the world. I say the World Gold Council because the council, in short, provides free supply and demand data for investors and the press around the world. So everybody tends to look at data from the council. And because my analysis is so different, I like to compare my findings with that of the council because everybody looks at their data. Okay, so the World Gold Council states Chinese consumer gold demand since 2013 is approximately 1,000 tons a year. In reality, Chinese consumer gold demand is since 2013 is approximately 2,000 tons a year. Note, I'm going to talk about averages and round numbers. If I would throw a lot of exact data around, that would get really confusing. So we're going to talk about round average numbers for the sake of simplicity. First, what we're going to do is talk about the private sector in China, and at the end of the post we're going to talk about PBOC purchases. I'm already mentioning here that my speculation is that the PBOC buys about 500 tons a year, and it has to be added to the 2,000 tons of consumer gold demand. So total private and official gold demand in China is about 2,500 tons a year. There was a paper released by Deutsche Bank in 2014 which stated that the PBOC is buying 500 tons of gold a year, and that 500 ton number matches a lot of other sources I have. There was a study once done by Zhang Bingnan from the China Gold Association in 2011 that also mentioned the 500 tons a year, and there are a couple more, and so that those all hint at the fact that PBOC is buying 500 tons a year, and there's more evidence about that we can see later on. Okay, so we're first going to talk about the private sector and Chinese consumer gold demand. This is a chart I made based on data from the World Gold Council. What we can see here is that Chinese demand was about 300 tons in 2007. Then it came up sharply, and in 2013 there was a large spike when the gold price came down, and since that time Chinese demand has been around 1,000 tons a year, according to the World Gold Council. Now this is a more realistic chart. What we can see here are the purple bars, that is demand by the World Gold Council. It's the same as the previous slide, but now we can also see apparent supply, which are the center columns, and STE withdrawals, the amount of gold withdrawn from the vaults of the Shanghai Gold Exchange. Now already from just this chart we can see that true demand is twice as much as what the World Gold Council is saying. We can see here that apparent supply and STE withdrawals are around 2,000 tons a year, while the World Gold Council is saying it's 1,000 tons a year. This cannot be. China cannot import 1,000 tons a year that is not being bought by someone. It cannot be, that is not demand. Okay, so how do we measure Chinese gold demand? We have the withdrawals from the vaults of the Shanghai Gold Exchange. The Chinese gold market is designed as such that all gold supply, import, scrap and mine supply finds its way through the Shanghai Gold Exchange. There are rules and tax incentives that push all gold supply through the SGE. And if all supply is going through the SGE, demand is the amount what's coming out. And so by taking withdrawals from the vaults of the Shanghai Gold Exchange, we can grasp what the size is of the Chinese gold market. I should add that once bars are withdrawn from the vaults of the SGE, those bars are not allowed to re-enter the vaults. Only if they are remelted and re-assayed, that gold is allowed to re-enter the vaults. That is not to say it doesn't happen. There is recycled gold flowing through the Shanghai Gold Exchange, and that amount of recycled gold needs to be subtracted from STE withdrawals to come to a more genuine level of Chinese gold demand. So STE withdrawals, I must say, I think they stopped publishing them this week, but provided us a very unique metric of wholesale gold demand in the Chinese market. We still have the data up until 2015. It's not a perfect metric, but I think it's a very usable indicator for Chinese wholesale gold demand. Then we have reports from the China Gold Association. These reports have been published in English, I guess, up until 2011, and those reports were publicly available online at the SGE website until 2014. After 2014, all the English reports were taken offline, and the China Gold Association gold yearbooks are now only being published in hard copies in Chinese. So it takes some translations to analyze them. Then we have gold export data from the UK, Switzerland, Hong Kong and Australia. Those 4 countries are the main exporters of gold to China. So by tracking this data, that gives us a very good idea of how much gold is going into China. And we also have the Chinese domestic mining output, of course, that is not allowed to be exported. And we have Chinese scrap supply. Here we have a chart, SGE withdrawals. What we can see here are the red bars. Those are the amounts of gold weekly withdrawn from the vaults of the SGE. So we can see here that when the gold price came down in 2013, SGE withdrawals spiked, and ever since they have been really strong. We can see here 60 tons a week, here 50. Here it was 117, which is really incredible. This is a very large shift in physical gold from the west to the east. If you're wondering how it can be that demand has been so strong in China while the gold price is going down, that is because there's also a lot of supply coming from the west. And so mostly from London, but also from other places. And it is all finding its way to the east, to China, and also to a lesser extent to India. Here we can see what we just talked about, examples from the STE withdrawals equal Chinese gold demand. We have here a screenshot from the China Gold Market Report 2010. This was still in English. Here we can see total demand disclosed at 837 tons. Below here is a screenshot from the SGE Annual Report 2010, and the total gold withdrawn from the vaults that year was 837 tons. This is exactly the same, and it was also the same in 2007, 2008, 2009 and so forth. So here we have the numbers from 2013. They stopped publishing this in English, so we have Chinese here. Up here is the total amount of gold withdrawn from the vaults of the SGE. It's 2,197 tons. This is from the monthly report by the SGE. And here we have a screenshot from the China Gold Association Yearbook 2013. Total supply that year was 2,199 tons. Remember that number. This is 2 tons more actually than this. It has to do with additional jewelry imports into the Chinese domestic market that were not sold through the SGE. But it's a little detail, I think, and I won't bother you with it. Here we can see framed in blue is the total amount of gold imported in 2013. So here we have a confirmation from the president of the SGE transaction department in 2014. He said about 2013, this 2,200 tons of gold, after leaving our vaults, they entered thousands of Chinese households in the form of jewelry and investment purchases. So this confirms the size of the Chinese gold market. It was 2,200 tons in 2013. And it confirms this is all private demand, not bought by the PBOC. So what causes the difference between SGE withdrawals and World Gold Council demand? This is caused by direct purchases from individual and institutional clients at the SGE. In China, every citizen or enterprise can walk into a commercial bank branch, they can open up an SGE account and start trading gold. They can buy gold and withdraw the gold from the vaults and store it safely. And this is causing the difference between SGE withdrawals and World Gold Council demand, because the World Gold Council only measures the gold that is being sold at retail level. Now, if we know that that all individuals in China can buy gold directly at the SGE, we can ask ourselves, why would any wealthy Chinese, or maybe less wealthy, buy any gold at retail level if it can also buy gold directly in the wholesale market and pay the lowest price for the gold content? I don't think any smart Chinese person would buy gold at a retail level, except for, of course, the women who want jewelry to wear their wealth around their necks to flaunt with. And so the SGE has more than 8 million individual clients and nearly 10,000 institutional clients. So if you do some, little calculations about how much gold these people all can buy every year, it is very easy to understand all the gold that is going through the Shanghai Gold Exchange. So SGE withdrawals capture total gold demand in China, and World Gold Council demand only captures the retail jewelry and bar demand. There are also, of course, bars sold at in jewelry shops and at commercial banks, and that is all retail level, and that's what's being measured by the World Gold Council. So here is a chart I made to illustrate what I just said. Here we see total SGE withdrawals, 100%. According to my estimates, half of those withdrawals are being bought by wholesale customers, so that can be industrial or jewelry manufacturers. They process the gold into jewelry or other parts, and this is being sold through retail to the private sector, and all this gold ends up at the private sector. The other half of SGE withdrawals is bought and withdrawn by individual and institutional clients directly and flows to the private sector. So here we can see a detailed chart from supply and demand data from 2013 by both the China Gold Association and the Council. We'll look at the first three columns. So here we can see China Gold Association supply. We can see here 450 tons of mine supply. Then we had 1,500 tons of import. It was shown also in the previous slide. And then we have recycled gold, and I've split this into two. I made this separation between scrap supply, and this is exactly the number I took from GFMS, and the rest, the residual, is recycled gold. Of course, total supply equals SGE withdrawals, as does total demand. And what we can see here is interesting, because here we can see jewelry demand, both from the World Gold Council and China Gold Association, and bar demand, and these are exactly equal, or exactly nearly. So this is the gold being sold at retail level. This is the jewelry being sold in jewelry shops. Sorry. And what is up here is being labeled by the China Gold Association as net investment. This is the amount of gold withdrawn from the vaults directly by the private sector. It is called net investment because it's a residual calculated as STE withdrawals minus retail demand. It is as simple as that. Okay, so a lot of people think that all the surplus gold, all the, if you will, net investment we saw here, that this gold is being bought by the PBOC. Now, I don't think they do, and there are a lot of reasons. I grabbed a few. These are 5 reasons. I don't think the People's Bank of China buys gold through the SGE because the PBOC has a lot of foreign exchange reserves, about 3.5 trillion at the moment. This is predominantly in US dollars, and the PBOC likes to diversify their US dollar foreign exchange reserves. And for that, they like to exchange their dollars for gold. All the gold at the SGE is denominated in renminbi. So the PBOC cannot buy gold at the SGE with dollars. So they're much more likely to go to the international OTC market to exchange dollars for gold. The international OTC market has also the advantage of being a private market. Everything is done in secrecy. So PBOC purchases are not done out in the open in the OTC market. The SGE, of course, is an exchange, so everything the PBOC would do at the SGE would be in clear sight. It would be very illogic for the PBOC to buy gold at the SGE. There's also a lot more liquidity in the OTC market, so the PBOC can buy larger amounts of gold without the price going up. Okay, so the third point is the People's Bank of China is likely buying 12.5 kg bars. 12.5 kg bars are the London Good Delivery bars, the 400-ounce bars. These are the bars central banks around the world buy and possess. These bars are relatively cheaper. The gold content in larger bars is cheaper than in 1 kg bars. For example, if you buy a ton of gold in coins, you would spend more money for the gold content than if you buy a ton of gold in 12.5 kg bars. So the People's Bank of China is likely buying 12.5 kg bars. Now, these bars are almost never traded over the SGE. If we go one slide ahead for a while, we can see here the trading volume of the 12.5 kg contract at the SGE. It's called AU995, this contract. And we can see here that from 2002 until 2015, only 3 tons of gold has been traded over the SGE in 12.5 kg bars. So this signals that no one is buying 12.5 kg bars at the SGE, so neither is the People's Bank of China. Next point is that monetary gold does not show up in foreign trade statistics. This is how it works. If the People's Bank of China would buy gold in London, which is the most obvious place for them to buy gold, they can monetize the gold. That is simply buy the gold, and when it's owned by a central bank, it's monetary gold. And once it's monetized, that gold is exempt from being disclosed in foreign trade statistics. So this is ideal for the People's Bank of China. They can buy gold in London or all over the world, in Hong Kong, in Singapore, wherever. They can monetize it and then they can covertly ship it home to Beijing, because monetary gold is exempt from being disclosed in foreign trade statistics. So I think the obvious story here is that the People's Bank of China can very easily buy gold abroad in the OTC market, where there's a lot of privacy. They could buy 12.5 kg bars without the premiums that are often at the SGE. They can buy big bars, the large bars, which are relatively cheaper, and they can pay with dollars. So it's very clear for the People's Bank of China to just buy gold in the international OTC market. Now then I have many sources that confirm to me the People's Bank of China does not buy gold through the Shanghai Gold Exchange, but it buys gold in the international OTC market. I have one source at the largest Chinese commercial bank, who tells me that the PBOC buys in the OTC market. Actually, he told me that the commercial banks serve as proxies for the People's Bank of China. So ICBC, Bank of China, banks like that, they buy the gold for the PBOC in London from where it's exported to Beijing. Other sources, we have stories from logistics companies. For example, there was a quote in a book from Jim Rickards, The Death of Money, in which he tells that he spoke to a manager from G4S, which is a logistics company, that tells him that they shipped a lot of 12.5 kg bars into China, especially starting in 2013. And those bars were not sold through the Shanghai Gold Exchange, and obviously went to the PBOC. Now, another gentleman I know that has connections to the billion banks in London also told me that indeed the PBOC, its proxies, buys gold in London from where it's shipped to Beijing. And he told me, by the way, they think that the People's Bank of China likely has twice as much as what they disclose. Officially, they say they have about 1,800 tons. But there are a lot of hints and clues we have that the PBOC is buying 500 tons a year. So I think they have more like 4,000 tons by now, the People's Bank of China. This we already saw. So if the PBOC bought so much gold across the globe, how do we have any clues for that? Yes, we do. So here we have a chart from Nick Laird from Gold Charts for Us. This is based on research he did with Ronan Manley, a colleague of mine at Billion Star. And what we can see here is that this is based on LBMA data. What we can see here is that in 2011 there were 9,000 tons of gold in London, in the London bullion market. And by early 2015 there were only 6,250 tons left in London. So that means that 2,750 tons have left London over the course of 4 years. This is a lot of gold. 2,750 tons left London over 4 years. Now, if we look at foreign trade statistics from the UK, we can see that there were still a net importer in 2011 and in 2012, which is interesting. After that, the price came down, and of course, they became a very large net exporter. But over 4 years, they only net exported 1,000 tons in non-monetary gold. Remember, everything that is disclosed in foreign trade statistics is non-monetary gold. So non-monetary net export was 1,000 tons, but 2,750 tons left London. So that begs the question, where did the 1,750 tons go to? Now, I think it is very likely that the People's Bank of China bought approximately 1,500 tons of gold since 2011 in the London bullion market and covertly shipped it home to Beijing. So if I'm right, the PBOC has about 4,000 tons now. This is a speculative estimate. I think there is about 18,000 tons of gold in China right now in the domestic market. I did some back calculations. There was an estimate done by PMI, Precious Metals Insights, once, and they stated that there were approximately 2,500 tons of gold as jewelry in China in 1994. We know that China was a net importer of gold since the 90s. So what I did is I accumulated domestic mine supply, official reserves, and once they started showing their real imports, they not showed it very obviously, but I grabbed it from all the China Gold Association reports. This all accumulated accounts to 18,000 tons. Okay, so my main thesis again is that Chinese gold demand is at least twice as much as was reported by the World Gold Council and thought by most investors around the world. If you'd like to know more, you can Google the Chinese Gold Market Essentials Guide at Billion Star, which is an article I wrote with many links to a lot of other articles I wrote about all the segments of the Chinese gold market, like the Chinese domestic gold market and the mechanics of the Chinese domestic gold market, the Shanghai International Gold Exchange, cross-border trade rules, PBOC purchases. It's all in this essentials guide. Okay, that was it.